Hello traders, Gary Wagner for Trending Markets, 11:15 in Honolulu, 4:15 in New York. Markets have closed for the morning. Dow Jones Industrial Average manages to get a solid gain on the day, also with the equities underlying that, the S&P as well as the NASDAQ, all closing higher. Interesting thing about the Dow is that it came very, very close to touching upon 18,000. That's right, 18,000 Dow, with a high of 17,977, so just shy of that point. That all in the light of a precious metals market that is currently in a meltdown stage. Whether or not we've seen the worst of it, with gold trading $16 lower, is something we'll have to see over the next few days. I believe that this is a real solid area in gold to look for a bottom, but I want to stress that one of the primary reasons for developing this adjunct to the gold forecast, meaning trending markets, was to be able to take advantage of markets that are in solid uptrends when the precious metals are not. And typically you will get that in the equities. When the equities are running real hot, you don't get the same thing in gold. We have seen them run in tandem, but that is a rare fact rather than a casual or a normal market scenario. So when we look at this Dow, how does that translate to our current position? Of course, we are long the E-mini S&P at 2068, I believe. Market closed up about 7 points on the day, 1/3% higher. But to me, more importantly, it closed at and above 2100. Now, we are absolutely in an interesting area. Very, very interesting area. And the best way to look at that, of course, is going to be to pull up a daily chart. You know, we looked at a couple of key factors when we entered the market, but we also looked at a couple of key factors in terms of where we need to see support. My sense was that if we were able to take out that current 200-day moving average that had been broken in a severe way with the August meltdown, that we would probably go into some sort of an extended rally. We've absolutely done that. Now that we are really flirting at around the 2100 point, we want to start looking at different areas. Of course, the record top in the market is above 2120, above 2130 actually, probably closer to 2138, 36 right in here. And the question is whether or not this market has the strength to continue higher and to actually challenge these various tops. We've got another top that comes in at 2120. And the one right behind it, let me get this as straight as I can, is actually a top that we have now taken out, these two prior tops. So when I look at it in that limelight, my sense is that we could in fact see an actual challenge for these record tops up here. So traders, that leads us to our current strategy, our current trade, and our current stop. Of course, we're long at 2068. We currently have a stop at 2060, which is roughly right in this area. It puts us below this little blip here. That is, I believe, a real supportive action. But at this point, I do believe it's time to move that stop up and protect some of our profits. And it's a difficult read because I don't want to put it in too tight. If we put it in roughly at 2080, we are putting it in right at these lows here, and we're giving ourselves a small buffer from the range that we saw today. In other words, if we see the market to continue to climb, that stop should hold. If the market does begin to backfill, and at any point, traders, it could, and I'll still be bullish on the market, but you really expect breathers in the market, then we'll get out with some profit. So my recommendation is as follows: to trail your stop, your existing stop, from 2060 to 2080, locking in profits on our current trade. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow on Wednesday for another Trending Markets. Bye-bye.